Yumila, let us quickly do a past paper or past papers based on the general journal. We'll start with question 1. These are transactions to be recorded on the 31st of October. We have Alan Martins, who is the owner. Highlight that. And Alan Martin took stationery as well as trading stock. But for trading stock, they gave you there's 980, and they also gave you the cost price. Alan Martin took stationery and trading stock for personal use. When the owner takes any item or anything from the business for personal use, it is regarded as drawings. If the owner takes money from the business, it will be recorded as drawings in the cash payments journal. However, if the owner takes stationery and trading stock, you will notice that it doesn't fall under any of the traditional journals that we know. The only journal we can record this entry is the general journal. By debiting drawings, which is an expense, that's why we debit it, and then we credit stationery, which is what the owner took. We basically just credit whatever the owner took for personal use, which is stationery and trading stock. Whatever the owner takes from the business for personal use, it must be recorded at cost price. Not at marked price, not at selling price, but at cost price. As I highlighted, you will notice that you were given two values for trading stock. And which value do you have to take there? Are you going to take the 980 or the 735? You definitely have to take the 735 because that is their cost price. Whatever the owner takes from the business must be recorded at cost price. Now let's record it. When you record that, you will record it at that 735. Add these two values to get the total drawings amount. And your total drawings amount here will be 865. Then draw the line. Narrations were not required in this question. Draw the line to indicate that you're done with the transaction. Remember, you always start with the account that you debit. And remember the accounts that you credit. You write them slightly to the right, okay? Slightly to the right, not in the same margin as the account debited. You write them slightly to the right to show that you're crediting those accounts. Let's go to number 2. It says that J Small, that's interesting, highlight that, a debtor owing that for 130 must be written off as bad debts. So we need to write it off as irrecoverable. Before I get to this one, I just want to say something before I forget. So in the first transaction, the owner took stationery and trading stock, right? We debited drawings, we credited stationery, and we credited trading stock at cost price. What will happen if the owner decides to return those items? We simply reverse the entries. So if the owner returns those items, normally when a debtor or a customer returns goods, we debit debtors allowances, we credit sales, then we debit trading stock, we credit cost of sales. But when the owner returns goods or stationery, we just reverse the entry. There's no debtors allowance because the owner is not a customer. We will basically just debit stationery, debit trading stock, and credit drawings. That is if the owner returns goods. If you check out my videos on drawings, I did indicate that the owner can actually decide to return whatever he took from the business. All right, let's go to number 2. So in number 2, it says that we have a debtor who is J Small. And J Small was owing us 430 and must be written off as irrecoverable. You all know that if an account is written off as irrecoverable, that is bad debts. You basically just debit bad debts and you credit whatever. Well, you credit the name of the debtor. Okay, you don't credit whatever, you credit the name of the debtor. And the whole amount that was owing must be written off as irrecoverable. So we debit bad debts because it's an expense. We credit the name of the debtor because it is a debtor, and in the debtor's ledger, this will be recorded on the credit side. And because J Small is a debtor, we'll also put it under debtor's control on the credit side. Then you will just draw the line to indicate that you're done with the transaction. You good? Great. Let's go to number 3. Number 3 says that repairs of 20,000 was done to the roof of building. This was entered in the land and buildings account in error. What exactly are they trying to say there? You cannot correct the error unless you know what the error is. So I'm going to quickly show you what the error was so that we can be able to correct it, okay? So this is what they did. This is the error that was done, okay? So right now, when that 20,000 for repairs was recognized, the bookkeeper made this error. The bookkeeper debited land and buildings because it is an asset and assets increase on the debit side. It's like you're obtaining land and building. However, this was a mistake, but I want to show you what the mistake was. And I don't know how those repairs were paid for, but I will assume that repairs, you will normally credit bank because I don't think you'll owe someone repairs. So this is what could have happened, right? And I just want to show you here what this means, guys. This entry here is wrong, okay? However, this one is correct because money has gone out. Because this one is correct, there is no need to correct it, okay? There is no need to correct this one. It is correct, so why must you correct it? The only one that we need to correct is this one over here. The one in green must be corrected because it is wrong. And the fact that it's wrong and it was debited to correct it, we just credit it. So I don't know what I'm going to debit, but I know that I'm going to credit land and buildings. By how much here? By 20,000. So by doing that, These two amounts will just cancel each other out. So land buildings, when we correct the error, will be sitting at 0, but we still need to make the correct entry. And to make the correct entry, we just have to debit the correct account. And that correct account will be repairs. And that will be 20,000, which is what we're going to do, right? We are simply going to debit repairs and credit land and buildings by the same amount, which is 20,000 rand. We good? Great. All right. Let's go to the next point. The next point says that A corner settled his account of 400 rand after deducting 5% discount. Now, the bank informed AM traders, which is us, that the client had insufficient funds to honor this payment. The correct entry was made in the cash payments journal only. In this transaction, you will notice that A corner is a debtor and A corner was owing us 400 rand. But A corner only paid us 400 rand minus 5% discount. First of all, we need to figure out how much exactly did A corner pay. I am going to take the 400 rand and multiply it by 5%. Okay. And that will give me how much? $400 multiplied by 5%. It gives me 20 rand. In essence, the discount was 20 rand. Meaning that we actually received 380 rand. And when we received this 380 rand, we recorded it in the CRJ together with that 20 rand. Both, let me just say that both amounts were recorded in the CRJ, right? However, when the payment is dishonored, the cash amount, which is 380, must be cancelled in the CPJ, of which it was correctly done, right? You were told that it was done, So no need to worry about that. Here it is. They said the correct entry was made in the cash payments journal only. So this entry here was correctly processed. But the problem is this person was owing us 400 rand. And we are saying that we reduced his account by 400 rand. Yet we only reversed 380 when the payment was dishonored, when the payment was not received. We are saying this person is owing us 380, and that is wrong because we haven't taken into account this 20 rand. So we need to increase what this person is owing us by that 20 rand. Which is the discount that was offered to a corner. And normally at my school, I normally say to them, if you really, really struggled with analysis of transactions in grade 9, I strongly recommend that they don't take accounting because those analyses are vital, especially when you get to grade 10. Once you know your analysis of transaction, i.e. the accounting equation, others call it AOL, okay? Once you know that, trust me, accounting becomes so easy for you. Now, if you were to do analysis of transactions, you would have noticed that when we received this payment, we actually debited discount allowed because discount allowed is an expense, and then we credited the name of the debtor, A corner in this case. So what we need to do now is to reverse that. How do we reverse that? By debiting A corner and crediting discount allowed, which reduces your expense. Now your expense will decrease on the credit side, therefore offsetting the initial discount that we have recognized. So we debit A corner because we have to increase what A corner is owing. Because A corner is a debtor, debtor's control will also be debited. And then we credit discount allowed, which is just a normal expense. And then underline to show that you have completed the transaction. The last point, Arlus. Interesting. Whose account was previously written off as bad debts? Oh, so for Arlus, this is what we did for Arlus. We debited bad debts. We credited Arlus, right? Guys, you need to understand this. When you recognize someone as a bad debt, check my previous videos when I went through bad debts. You will realize that when someone is written off, at the end, in their debtors ledger, we have 0. Because we are saying this person is no longer a debtor, they have been written off, they don't exist in our books anymore. Because in their debtors ledger, it is 0. There's nothing there. You get it? So that's what happened when you write a person off. It's like you're writing your friend off. It means after writing your friend off, you're not friends anymore. It's done. But now when your friend comes back, you decide to reduce your friendship. But how do you reduce your friendship when it wasn't there anymore? So that's what I think is happening here. Let me just read the whole transaction. Let me not make conclusions. It says that R. Lewis returned from overseas and settled his outstanding account of 1,250. This receipt was entered. You see, that's where the problem is, guys. It was entered in the debtors control column in the CRJ. And when you enter it in the debtors control column in the CRJ, this is what you are doing. You are saying that I'm going to debit bank by 1,250, and that transaction is correct. But now you credit Arlus by the same amount, which is 1,250. Now, in these two transactions here, this one is correct. But that one is wrong because this data does not exist anymore. So why reduce R. Lewis when R. Lewis is already owing us 0? If you were to credit R. Lewis, it means that you're saying R. Lewis is now a creditor because we're going to have a negative balance in his account. So what you did here was wrong. You were not supposed to credit R. Lewis. What were you supposed to have done? You were supposed to debit bank, which is correct. Okay? Bank is correct. But you made a mistake by crediting R. Lewis. So to correct that, actually, you were supposed to debit bank and credit when a data that was previously written off comes back. We credit that to a new account, which we call bad debts recovered. And bad debts recovered is an income account. That's why we credit it. And we debited bank, which is correct. We can't correct what is already correct. We have to correct what is wrong. We have to correct this over here by debiting R. Lewis by the same amount, which is 1,250. So that's how we're going to correct that error. Debit R. Lewis, which is a debtor, it will affect our debtors control so that we reverse the initial entry that was made and then credit bad debts recovered. And that's it. You just add the totals of your debits for debtors control and the credits for debtors control as well as creditors control. And that will be it. Okay. Try this one out. And this is what you're given. Then check out the next video as I go through this transaction. Also,